Hello guys. Today I am thinking I am on time. Thank you very much for coming. So right now I see there is no one yet. Okay, so I will be just waiting for a few minutes and we'll see what's going on. So this session for today, why traders break even or lose money. It's a very important subject because most hello Wiseman, how are you? Because most of the traders have this problem. Hello Muhammad Benaba, how are you? Hello Artkov, how are you? Thank you very much for coming. So this is just the beginning. I just see 3 guys watching, which is very good. The subject of today is very important for everyone, and we try to explain as much as I can. The subject of today is why traders break even or lose money. Because see, all the people who make money are still subject to this session. Okay, it means even if you make money, you can ameliorate your performance. The more you know the market, the more you know stocks, the more you know the skills, you can ameliorate your performance. But in general, hello Moises, Mwira, good morning. Hello Shmuel Berliner, how are you? So how are you NASA? Thank you very much for coming. So I see around 11 people. So 6 people they're always right. Some other people they don't, but it's okay. So hello NASA. So we try to begin because we are in December. This subject of performance is so important. It means if you in the whole year you are trading, so I don't mean that you are doing only swing trading, but let's say you are doing day trading. It's the same thing, okay? Because the main thing is, are you making money? Yes or no? Day trader or swing trader or investor, most of the time performance matter. But if someone, let's say, is break even, especially in trading, swing trading or day trading, that means that you have made winners and you have made losers, and the outcome is break even. It means you don't lose that much and you don't make that much. It means you break even. So in order to analyze this situation or break even, before we are speaking about losers or we speak about winners, we speak about this category, which are called break-even traders. Before, like few years ago, I find a lot of penny stock traders who are break-even. Sometimes they make some money, sometimes they lose a lot of money, and the whole year they are trading, but at the end of the year, 31st December, when they finish their trade, they should see, for me, this is how I look at it. I look the 1st of January 2017. What was your account? Okay? Then 31st of December, which is the last day, it could be whatever day is, okay? That day is very important. You should look at winners and losers and why you have made money or why not you have made money, the causes, the reasons. Now, each person is different. That's why always when I'm speaking about, when I say what is the reason, there is no only one reason. It depends on each trader by himself. But there are some generalities about the people who break even. Break even, it means that you don't have good winners. This is absolutely true. Okay? I just have a few days ago, one of the guys, he began to trade and he told me I am breaking even. I don't make money and I don't lose money. It means each time I make, I lose, I make, I lose. So I don't know what's the problem. So with him, I'm trying to, I say, for example, give me some of the good trades that you have done and some losers, and I can see what's the problem. Okay? Because people, they have different problems. Now, the first problem is that your good winners don't make money. And you say, and you may say to yourself, oh, it is a winner. No. Okay? This is the problem. For me and for other traders or for other training providers or whatever you call them, teachers or tutors or whatever, or coach or whatever, for me it is different from other people. Okay? When they say you make money, it means that trade you really make money. Okay? It has no percentage. I'm not speaking about percentage. You say, oh, what is a good trade? What is bad trade? No, I'm not speaking about that. I'm not speaking about percentage because percentage is always misleading. Okay? We have a question of Wall Street 11. What strategy should we use to make money and less loss? Obviously is you follow me. It means you follow my strategies. And when you have problems, this is why I am here with this live session. I'm trying to see why the people, they don't make money. I'm not speaking here about strategies right now. For me, this session, I'm trying to speak about why. I'm not saying because you don't use that strategy or not that strategy or other things. So you should just Wall Street guy, Wall Street 11, who asked the question, and all of my students and all the people who are here, the aim of this session is to show you things that you might ignore and you don't know because you have other concepts. Because the concepts that I am working with are different from other people's concepts and strategies. That's why when you understand my concept, if you like them, you follow me, you do my training, and I follow you until you succeed. It means I am with you many years. It means I'm not going to let you just do the training and then say bye. Okay? No, it's not. This is not my goal. My goal is to make independent traders. It means, what does it mean, independent traders? It means you do everything by yourself. I teach you everything you want to know. Okay? Everything you need to become a profitable trader or a successful trader. But this, it needs from you discipline, acquiring skills, following instructions, and don't changing anything until you succeed. And then when you succeed and you want to change something, it's okay, no problem with that, because at that level you know what you are doing. Okay? Now, Wall Street, you say, I completed your training. I want to learn more about swing trading. Yes, my training is about swing trading. If you completed the training, you should do. Oh, yeah, okay. Thank you very much, Wall Street. So, Wall Street 11, have you begun practicing for all these months or this 1 year or two? Have you been practicing? If you have been practicing, you will have been like acquiring skills. Now, if you are making money, it's okay. If you are breaking even, it means you have made mistakes. It means you are doing the same mistakes. That's why you don't see the money. That's why what you should do. Thank you very much. Thank you. Wall Street said, yes, I am making profits through your training and I am very thankful to you. Thank you very much for your testimonials. Thank you very much. But the main goal that I am doing here is to make you an independent trader. Now, in this session, we try to see why you do training and then you break even. It means there are some problems. There are some mistakes that you are still doing. The only thing you can make money is when you correct these mistakes. If you continue to do the same mistakes, okay, the results will be the same. This is a logical thing. So Wiseman said, some traders are so generous, they give lots of their profits to brokers. They charge high commissions. Yes. Wiseman, yes. Thank you very much for this. I have seen some brokers, not from here, but from Australia, for example. They ask them $18 or $19 to buy, $19 to sell. They take $36 in a trade, which is so bad. And for those who are giving too much money, I say you are just doing a crazy thing. You should never give your broker or market maker that much money because it will affect your profits. Okay? I will, Wiseman, I will be speaking about that, about commissions later. But right now, I'm trying just to begin with the beginning. Okay? When we say break even, someone who doesn't make money and doesn't lose that much money, what does it mean for me as a trader? For me, you are attempting or you are trying to do good trades, but you succeed in some trades, you don't succeed in others. But the problem is that you have still some problems that you should fix before you make money. Since we are at the end of the year, it's high time to begin fixing your problems before the beginning of January, which is the new year. Now I understand December or January is the same thing because you are trading. There is nothing changed in the market. It's always trading. But the problem is that when you begin a new year fresh and you correct more mistakes, you will see better results next year. Okay? Now, break even, it means that you don't have good trades. Now, someone, for example, sent me some trades, some good trades. He said, I told him, he told me, I am breaking even, I'm not making money. Although I do your strategy. I say, okay, you are doing my strategy and you are not making money or losing money. That means that you are doing some trades that are winners and losers. But send me some samples, it means some good trades, some bad trades, and I will check them. Now, I find, let's say, a good trade, he make $100 profit, and a bad loser, 150. Now I ask the question, are you going to make money like this? If you continue the same like this, are you going to make money? No, you'll be a loser. Now, what is the problem? It is a winner, because he told me, no, it is a winner and this is a loser, and I have more winners than losers. I say, no. You can't make money because of the losers, more winners than losers. This is a false concept. You make money when you follow trends. That is the heart of swing trading. Swing trading is to follow trends. When you follow a trend, you should make money. Money, it doesn't mean you make 100 and you say this is a winner. This is not a winner. The stock, I give you an example. If you buy a stock at $20 today, tomorrow it goes to 21. How much money you make if you buy 100 shares? Okay, you buy $100. This is your profit. But in terms of me or my strategy, is this a winner? For me, it is not. You think because on online, they don't care when they count the winners and losers. They don't care. They say whatever you make money is a winner, whatever you lose money is a loser. Even if it is $1, you make $1 more. Some websites, if you there are some people, they use websites and they put their trades and they give them winners and losers, and they give them analysis. This is not true, because the guy who make the website and they make the criteria, these criteria are false. Hello JJ, I haven't seen you for a long time. Thank you for coming. Okay, so let's continue. I say there are some people who use a third-party website. For example, there is a website, someone sent it to me, and he say, you put your statement and it will give you an analysis. Okay? Winners, losers, what time, which day you make money, which day you don't make money. I say this is a stupid thing. Stupid thing, because you think that these websites can help you understand something. They will never help you understand something, because they have criteria that it is different from my criteria. And this is very, very important that I will explain in this session. Okay? We begin from the beginning. When we say winners and losers, I don't think that this will make you money when you make more winners than losers. Some people think it is correct, but for me it is false. Now I will prove you that it is false. Okay? Let me drink some water. I put some ice. Okay. I have given you the example. I repeat the example again. You buy a stock today, $20. Tomorrow is $21. It goes up. Let's say you close this trade and you sell your 100 shares. You will have $100 profit. Now I ask you the question. Is this a winner? You say yes. Okay, it's a winner. But have you made money? Is $100 that we are looking for in our strategy? Okay, you think that it is yes, but no. For me, it is false. Our goal from each stock is to make real money. 800, 1000, 2000, 5000. They're depending on your money. But we are looking for some thousands of dollars to make it a winner. Okay? I am not doing a trade to have $100. I am not a day trader. Now, in day trading, if you make $100, $200, or $500 a day, this is a good money for you because you are working day by day. But when you are working as a swing trader, you stay 1 month in a trade and you get $100, this is not what we are looking for. So you ask me the question, what is your winner? My winner is when you make real money, not 100. You can make 1,000 or 800, 2,000, 5,000, depending on your money, because I don't know how much money you have. Okay? So you make money because you stay longer in a trade. Why? Because you follow the trend. And this is how you make money from swing trading. And it's near investing. Because investing, you stay in good times and in bad times. You stay, you hold the stock, either good or bad. Okay? In swing trading, we stay in good time only. This is the difference between swing trading and investing. So, for example, you are investing for 5 years or 20 years or so you don't care that much if the stock goes down or goes up. But in swing trading, as we follow, we try always not to stay that much with the loser. We put stop loss and we exit as soon as we know that the trade is a loser. Okay? Now, this guy who is making break-even trades, I see all his trades and I discover that his winners are small winners. It means it is as if he is doing day trading. He is not doing swing trading. If you lose 100 in one trade and you make 100 in another trade, plus the commission, which is over you are not going to be a winner or even break even. You will lose money. So this is one of the important things that I am speaking about, is, are you making money from each trade, yes or no? It couldn't be like each trade you make thousands of dollars, no. But I am telling you, if it is a winner, it should be a winner. A winner, you should make money from it. Okay? This is one principal thing that you should put in mind. And if you are doing smaller trades with $100, $200 in your swing trading, it means there is a problem in your strategy. There is a problem. Either you exit early, or your stop loss is bad, or you pick the worst stocks in the market. That's why you are not making that much money. Hello, Mr. Handa, too. How are you? Okay. Now let's go to the second part, which is losing money. Losing money, obviously, when you are losing money, what does it mean? It means that your losers, what you lose is always bigger. And this is most of the time either because you don't use a stop loss, or because you use badly the stop loss. You don't know how to calculate. You give too much. For example, I just give you an example. Someone sent me his trades and he put 10% in stop loss. Hello, Slabyak Rare Coins. Oh, you are my friend, Rare Coins. I have done coins before, it's very good. Hello, Slabyak Rare Coins. How are you? Now, just to make it clear, if you are doing 10%, now first, who tells you to put 10% in stop loss? I didn't. Stop loss is tricky. You should see your tolerance, risk tolerance. You should see the stock if it is volatile or not. But you should never use the same stop loss for every stock. This is a mistake. So, in order to make money, you should look at this stop loss. You should go for example to training level 6, how to calculate stop loss, and you should study this and fix this problem. Thank you very much, Rare Coins. Thank you. Okay? So this is a problem. Stop loss for a lot of people is a real problem. They don't know how to calculate the risk, and they put a stop loss sometimes at a high percentage. They put, for example, 10%, 15%, 20% down from the purchase price, and they think that stop loss is this. They think that stop loss means that the price should not get to your stop loss, and this by itself is a mistake. Stop loss has nothing to do with if the stock goes down to hit it or not. It has nothing to do with this. It has to do with your risk tolerance. If I ask you, for example, if you buy $2,000 a stock, whatever is this stock, and you risk $500, are you okay with this? Yes or no? $500 you risk. That means $500. It means 25% of the stock. So giving 25% to a stock is too much, because if you do 2 or 3 trades, you are not just a loser, but you lose all your money, because the stock can go to 25%, it can go to 40 or to 50, down, and then it goes up. Okay? So all the people, all of you guys, if you still have a problem with the stock with the stop loss, you should try to see training level 6, how to calculate stop loss, to go to it, study it again, check all what I do as examples, and you should follow the instructions, because this is a big problem. Now, other people, they are so scared to lose, and this is another problem. For example, you put 1% as a risk for all the stocks. This is stupid. Why? Because any day fluctuations, you can get more than 1%, 2% or 3%, depending on the stock, and you will exit. What does it mean? It means you buy a stock today, tomorrow you will exit. You do another buy, and then you exit. Another buy, another exit. And you say, oh, I do stop loss. No, this is not stop loss. This is you don't leave any room to your stock. You strangle the stock. That's why you exit early. Okay? So this is, in stop loss, this is a problem, a real problem. That's why stop loss, it's not easy. Some people, they think it is easy, but it is not. You need many months to work on stocks, to discover stocks if they are slow or they are volatile, and to practice until you get the good stop loss for every stock you choose. It's not easy. I'm telling you, it's not easy. It needs work. That's why all my strategies, anyone who wants to succeed, he needs to work. I'm not saying to take 10 hours working, no. You take just a few minutes and you decide where to put your stop loss. You should see your risk, you should see the stock volatility, and you do it. Now, after a few days or few weeks or few months, you try to see if what you do is good or bad. This is just the basics of stop loss. Mr. Handa has a question. Abdul Karim, do you prefer a stop loss on quote or a stop limit or on quote for the stop loss? Okay. Mr. Handa, you should always put a stop on quote. Now why? Stop on quote, what does it mean? It means when your stock reaches that price, it becomes a market order. What does it mean, market order? It means you ask the exchange that you want to sell right now and now. You don't want to wait. This is what we call stop on quote. It means whatever quote is, it means the bid, whatever is the bid, you want to exit on that price, you exit on that price. Now don't use stop limit because this makes a problem. Sometimes the stock jump over your limit order and you can't exit. Sometimes you put stop limit or you put limit and the stock goes down to your price and you will not exit. And next day you open your account and you still hold the loser and the stock will be going down and you lose more money. So in terms of stop, you should use a stop on quote or what we call stop order. Because we want to exit by force. It means immediately and without thinking. Okay, that's what we call stop on quote. So Mr. Honda, use a stop on quote when you are doing stop loss. If you use a stop limit, sometimes you will not exit the trade. You will stay in it because you know sometimes the price jumps over your stop loss. For example, to understand this, let's say your stop loss is $20, 0 cents, $20, okay? And the stock was $20, 5 cents. If there is a large order, millions or thousands of shares sold at once, sometimes the stock price changes from $20, 5 cents to, for example, 19.95 cents. They change directly because the order is so big. Now your $20 stop loss, because you put a stop limit, it will not be triggered. What does it mean? You are staying there. That's why always use a stop loss. Now let's see, here's another question. I did my first trade this past week. I used a stop on quote at around 5% below my entry point. However, the stock fell dramatically and I ended up losing about 9% on my exit. Yes, sometimes the orders when they come, they are so big, so it is not guaranteed. What you are asking for the market. You ask if the price reached that price, which is the stop loss price, you exit with a market order. Now, when the market order reaches, maybe the stock has already gone down. So you should accept whatever is the price. This is the market. You can't change that. This is automatic. This is not you or someone who changes the prices to please you or to please another one. But this is the market. The next price that comes after your stop loss, let's say it is 9%. You will get 9%. You can't go and argue with the market that it is automatic. It's automatic. No one is against you or someone broker is after you or market maker is after you and give you bad feels. No. this is a fair and automatic thing. Okay, this is because you are in a volatile stock. From 5% you get 9%. Yes, sometimes you get more, less and less and less. And let's say you have bought 10,000 shares. What will happen? You will get bad and worst feel, because when you have a big position, the stock will be going down, and they don't have all the same price. Okay, so try to understand, Mr. Honda, try to understand that this is automatic thing. Now, what does it mean automatic? It means a software that it is working. It's not a human. It's not a human who changes the price and he put the price by his hand, okay, like a calculator. And no, it's not like this. It's a software, and it works according to the orders that it comes. Okay. Shmuel Berner said, stop loss make you free of being scared and you feel safe to follow the trend. Yes. Mr. Honda said, I understand, thank you, I have learned a valuable lesson. Thank you very much. The stock I bought was VHI, if you want to see. Okay, Mr. Honda, can you please send me an email and send me what you did when you buy, when you put the stop loss, and I will check how the stock has done, and I will just give you a private opinion. Okay, so please send me, here is my website and my email. Okay, so please send me an email, and I will explain more and more because of your example. At least you will understand this very good. Thank you, Mr. Honda. Thank you very much, and thank you for all your questions. Now, we said that stop loss, a lot of people, they don't understand. And because they go online and they say to them, oh, stop loss is very easy. Put 1% or 5% or 10% and this is stop loss. No, this is not stop loss. Each stock has a stop loss, different from other stocks. Each trader has a different stop than the other one. Okay? Why? Because people, their risk tolerance is different. For example, for me, I can go to 15% or 20% in some stocks. You can't. Because if you do them, okay, and you don't know how to trade, maybe you lose 20% of your money and it's over for you. So this depends on the experience of the guy and how much risk he wants to take. There are some stocks that are very, very volatile. If you put 1%, 2%, 5%, you will exit immediately. And you don't want to exit because it's a good stock and you can make a lot of money. So you should handle the stock well. And what I mean by this is just the beginning. It means the initial stop loss. I'm not speaking about other when you change your stop loss when you follow the stock. Okay. Now, another thing about break even is sometimes you get scared to wait. I give you the same example to make it sure you understand. Let's say another two, I will give you a clear example. Let's say you buy 1,000 shares of a stock. Any stock, it means I'm not speaking about, let's say it is $20, just an example, or $10 or $15 or $2, whatever it is. Let's say the stock has gone $1 more. It means it goes up $1. Now, you have bought 1,000. Now, 1,000 shares, and next day you get $1. You see $1,000. Now let's say you are a beginner, you have never seen $1,000. You get excited and very happy to see this money. So what do? You just exit the trade without stop loss, without anything, and you say, no, I will take this 1,000 because the stock will go down and I will lose this 1,000. It becomes 500 or 200 or I lose it all. Okay? This is because you are scared. You are not following the rules. We are not following $1 up. We are following a trend. So put your eye on the trend. Don't put your eye on the price that you are getting right now. Now, let's say you exit the trade and you make this 1,000 and you think that you are the biggest traders in Wall Street because you make 1,000 and you have never seen $1,000. After a few days, this stock, let's say it is 20, it goes to 21. After 1 month, it goes to 30. From $20, it goes to 30. You exit at 21, thinking that you have made money. Now, if you have stayed this 1 month and you make $10 for each share, how much money you make? You will be making $10,000 in that trade. Is $10,000 good? Yes, it is a good trade. Now, is 1,000 good? No, it is not. Because why should I take 1,000 and I leave $10,000? Why? This is to show you that if you continue to do the same mistake and you don't see the trend, you are not going to be a trend follower. So swing trading is not for you. Maybe day trading is good for you. You can do day trading. It means you need action. You need to do quick thing. Okay? Half an hour, 1 hour, 2 hours each day, and you make some money. That's it. So it's preferable that you go and do day trading and stop doing swing trading. Swing trading is for people who wait for the big money. I am not here to make $1,000 or $500 if I can make 5,000 or 8,000 or 1,000 or 10,000. Okay? So that is the problem, that most of the beginners, when they break even, it means they rush to take profits. So, if you rush to take profits and you don't wait, it means you don't believe in swing trading. Because before you do something, you should understand what is swing trading. What is this short-term trading that you are doing? You understand the concept. The concept is, when you do a trade, you should hold the stock until you get enough money, until the stock stops giving you money. Now you tell me, how do I know that the stock stops giving money? There are some techniques, and I showed in training level 7 how to follow an uptrend. And I have my trade, which is 5 months and 2 weeks live. For each week I make a video live. I will show you how to stay that long. If the stock trends, but if the stock doesn't trend, it stays a few days and it stops going up and go down. This is, I understand, it's not a stock that trend. That's why you should ameliorate your skill of selecting stocks. This is another problem. It is a skill. It's not something that you will know just like this. Yes, you know the criteria that I have, for example, but you need to practice. Okay? Practice is king. If you don't practice, your selection of stocks will be weak. Okay? I someone sent me just a few days. He sent me a stock, and when I check the stock, he tell me, what do you think? I see the stock, it has a long trend, maybe 6 months going up. I say, man, you are at the end of the trend. It might be going 1 week or 2 or 3, I don't know. But in terms of probabilities, the trend will be drying up soon. Okay? So, if you select stocks that the trend is seen, it's no way to make money. It's the probability of make money is less, because you should search for stocks at the beginning of the trend, not at the end of the trend. Because at the end of the trend, any stupid person, even someone who has never traded in his life, if you show him that a stock has been like $10, now it is $30, what do you expect? The stock might stop and go down because the trend has finished. Okay? Any stupid person can see that, and you see that, and you insist and you go buy this stock because you are buying the trend that has finished. And this is a real problem when you don't see very clearly the history of the stock. For me, whenever I want to buy the stock, I see my criteria. I go back to the stock and see what the stock has been doing in this year, in 1 year, for example. Okay? And I see if the trend has just begun or it is at the end of the trend. If it is at the end of the trend, I would not buy the stock. Okay? So I have another question. Wall Street 11 said, how to exit from your winning trades before ending up with nothing? How to exit from your winning trades before ending up with nothing? Okay. Wall Street, if you have bought my ebooks, it will show you how to exit on time. There are techniques that I have shown in training level 7. And there are videos. Even those who bought, for example, ebooks, I put the live trade of 5 months and 2 weeks. I put it there. You go there to your training, you find it, and you watch it, and it's like 30 videos, and you try to learn more and more how to exit. The stock, with some techniques, will show you if it stops for real. It stops when it doesn't go anymore. But there are some techniques it shows you if it will resume, yes or no. These techniques, I put them in training level 7, and I have the live trade. So you should watch that. And let's say if you have a stock and you exit the trade, you send it to me, I will show you if, according to my strategies, if the stock has given you a signal to buy, yes or no. I will tell you. Just send me the trade with all the information, when you bought it, the date, where is the resistance line or support line, where is the stop loss, and I will show you if you are wrong, yes or no, according to my strategies and my techniques. Hello, Lighthouse Show. Thank you very much for coming. Thank you very much for coming to our session. It's 49 minutes. You are a little bit in the middle of this session, but it's okay. JJ said, how can I take a break from trading? I feel like I am addicted to the market. I am always searching, studying, and trading. Now, JJ, if you make a plan, like me, for example, you divide your account into positions, whatever position you divide. You buy stocks, you put stop loss, and you follow them. If one you exit the trade by stop loss or by taking profits, you replace that stock. That's it. You will not trade that much if you follow this strategy. Okay? It means you only replace what you exit. Let's say you have 5 positions. Okay? It's just an example. Let's say one is profitable trade and you put stop loss and then you exit with a profit. What you should do? Just search in that day at the end of the day and replace that stock. Okay? Now after a few days there is one, you bought it, and then the next day it's not good stock, it goes to your stop loss and you exit. You buy another stock. That's it, what you should do. This will not be boring. This is what we call discipline. You don't search when you don't need. For example, for me, sometimes 1 week, 2 weeks, 3 weeks, 4 weeks, I don't see my broker. Now you ask me why? Because I don't need to. If a stock I see in the chart, I exited the stock today. Let's say in the morning or at 10 o'clock or 12 o'clock. What should I do? I open my account, I buy another stock. I search, it's only one stock, I buy it. I put stop loss and I close my account. Okay? So you should be disciplined and you should do this the whole year. Okay? It doesn't take that much time as you might think. And you say, if you are a beginner, yes, because you are practicing, you are seeing a lot of stocks, it's okay, but don't overwhelm yourself. Let's say you don't want to risk your money yet. Let's say you are just a beginner, you begin to trade for 1 month or 2 or 3. So my opinion is put only few stocks and follow them. Try to do as if you are doing a real thing. But don't put too much. Don't put 20 stocks and follow them. This is stupid because you can't analyze 20 stocks at the same time each day. This is a stupid thing and you are overwhelming yourself and you become stressed. You become like you are doing a day trade or day trading. In swing trading, we are not stressed. You should just do what is right on the right moment. This is what we call the momentum. Okay? We buy when we need to buy only. If we have 5 stocks, for example, and our account is full, we have no money in our account, why you are going to go and search again stocks that day or the other day? Why? You are just wasting your time. Follow the few stocks that you have and try to apply the techniques. Okay? This will make you a good trader, a disciplined trader, and you follow the instructions that I have given you. That's how we work. And this is what I do for the whole year. I don't do other things. That's why for me, I have time to do other things. It's just because when you are disciplined, you buy when you need only. You just look at the chart. You don't go to your broker if you don't need to. One time in the live trade, I stay 1 month without looking at my broker. Why? The stock has done nothing and I didn't exit. So what should I do? I just wait. Don't be frustrated to wait. You should hold the stock until you see some money. Now let's see JJ what he says. JJ said, how can I take a break from trading? I feel like I'm addicted. Yes, it's the same thing I am saying. I am always searching, studying and trading. It's just because maybe I don't know what you are doing, but you might, for example, you are doing too much. Okay? If you are studying, don't overwhelm yourself. Okay? Just do what is right each time. Try to study little bit by little bit, and practice. There is no need to watch 10 training of my training if you don't practice any. This is ridiculous because you are not learning nothing. Because my strategies are based on price, are based on practice. You should practice to learn. Theory doesn't take you nowhere. It's just theory. But when you get to buy stocks, to feel when they are going up, to feel when they are going down, to put the stop loss, to follow them, this is the real thing. This should not be boring. It should be just discipline. It means you just buy, wait, and see what goes. Now, if you have a problem, you can just send me an email and you say, okay, I have this problem. I bought this stock for 2 weeks, 3 weeks. It doesn't do nothing. What should I do? Just an example. So I will see your stock and I will tell you my opinion according to my strategy and my techniques. Because for me, I am like you. I try to abide by my rules and my strategies. I try to be disciplined also. If I am not disciplined, I can't make money from the market. The market punish the ignorant people, the lazy, the ignorant, the people who just they do whatever. The market will punish them because they are lazy or because they are doing risky things. Okay? That's what I am following. Now, JJ, if you you say I feel like addicted to the market. No, the job is not an addiction. Okay? It means you are doing something. It should be exciting. It should be something that you will make money from. So it shouldn't be an addiction. Addiction, when we say an addiction, it has a bad thing. But it's a bad thing. When you say an addiction, you say addiction to alcohol or addiction to drugs. But addiction to the market, no. If you are making money, it's not an addiction. It is profits. You are making money, so it's good for you to make money and to continue making money from the market. Okay, so it's no more addiction. Now let's go to the second part, which is losing money. Losing money, it is a lot of things. It's not as you might think. Here is an example. One guy sent me an email before and he says, whenever I buy a stock, it goes down. What do you think about this guy? Doesn't the market knows this guy? Whenever he buys, the market will go down. Does the market know this guy? It is his enemy? Or a broker knows this guy? Or the market knows this guy? Or the millions of traders know this guy? It's not true. Yes, he is making losers. Why? He might be searching for an industry that it is going down and he is always attracted to this kind of stocks. The industry is going down and he is still buying from this industry. Because sometimes the industry stops going down, it goes up a little bit and then it goes down. So he is in the same stocks. Okay? That's why some people, when they make money from one stock, they try to go back and back and back and back and forth to make other trades. If there is no opportunity according to your signal or according to your strategy, there is no need to buy a stock more times, 1 time, 2 times, 3 times, and you see that you are not making any money. Okay? This is one thing. Now, losing money, sometimes some people, they make big losers. This is psychological and I have talked about many times. Now, what does it mean? What does it mean psychological? It means you are stubborn. You don't acknowledge the market that you are wrong. If you buy a stock, it goes down, either it hits your stop loss or you don't put stop loss and then you exit with a big loss. This is your mistake. It is not the mistake of the market. It's just because you stay longer and longer because you think that you are right always, and this is not true. You should acknowledge, you should accept the loss and go on and make another trade and forget about that trade. If it is your fault, it means your mistake in entry. For example, you buy a stock but it's not the good entry and you do a mistake, okay, it's always your mistake. Because another guy in the same day, he buy another stock and he do the same search of you, and the next day he make money, and you choose the other stock and it is a loser and you lose money. So what does it mean? It's all because of you. So you should accept the loss and do another trade. This is one of the most important things that I'm speaking about, break even or losing money. Even sometimes you make money 5%, 10%, or 15%, or 20%. Sometimes in some trades you get excited and you exit early. Okay? So when you exit early, understand that you leave some money on the table. If you follow my trade, which is 5 months and 2 weeks, which is live on training level 7 and in my subscriptions, you will see that when I exit the trade has fallen down. What does it mean? It means I was right by exiting the trade, because after that the stock goes down, then we have a gap down, and then it's all a mess. So my exit was good, okay, because the stock has not gone up anymore. After that, after a few weeks, it means I'm right. But let's say if you exit a trade, after a few days it goes up and it continues to follow the trend. What does it mean? It means that you are false. Either you should buy the stock again or forget it, forget about the stock and buy another one. Okay? It happens in another stocks that you put stop loss. It means you want to exit early. You stay 1 month or two, but that happens something, you exit. But after 1 week or two, the stock resume going back, and it makes a reverse, and it continues to go up and follow the trend. But you exit on halfway. Let's say the stock goes from 20, it goes to 30, and now it goes to 28. You exit at 28, and then the stock, when it goes to 28 to 27, it goes up to 30, and then it continues to 40 in 1 week or 2 or 3. Because time, you will never know. Okay? Time, it's not time that makes the money. It's the direction, and if the stock is fast or slow. Okay? Sometimes you stay 1 year in a stock, you make 10%. An example. But sometimes in 1 month, you make 50%. So the time here, it's not a big deal. The time, it is just to allow the stock to breathe and to continue its way. When a mutual fund or big guys are buying a stock, they don't stop in 1 day or 2 or 1 week or 2. They are buying because they can't buy that much, so they buy slowly, and you will be following these guys until the end of the trend. It could be 2 months, 6 months, even 8 months or 9 months or 10 months. Some trends are so big, and you can make a lot of money. I have seen some trends. They stay long and they are good. It means they don't do a big corrections, very small corrections. In the stock, it's like a line. It's like a straight line when you see it. What is so good. Okay? Now I have a question from JJ. Say, is break even a bad thing? Now, break even, it means you are still doing big mistakes. So JJ, if you trade for 1 year, let's say you have $10,000 in 1st of January 2017. In 31st of December 2017, you have $10,000. You have traded 100 trade, 200 trade. You have made some winners, you have made some winners, but your money is the same. Now, what does it mean? It means that you are doing some mistakes. If you correct these mistakes, you will be, in the other year, like 2018, you will be making 5% or 10% or 15%, depending on your skills. Okay? But if you continue and you ignore, okay, if you ignore that you are break even and you ignore that you are doing mistakes, what will happen? You will do the same mistakes in 2018. Now, what is the results? The same thing. Okay? So the best thing is to see what's wrong. Why I am not making money? There is something wrong with what I do. That's why, for example, if you go to, I think training level, let's see, I think it's 17. Let me see the training. Yes. If you go, for example, to training level 17, I will just try to see training level 17, how to fix your trading problems. Okay, if you go, for example, to training level 17, how to fix your trading problems, I have 28 problems with solutions. Now, it doesn't mean that you are going to do 28 problems. No. But you are doing some of the problems described in the training. Now, what you should do, you should study all the 28 problems, try to see the solutions, and then try to see your account. What are the problems that you are doing according to the training? Since I give you the problem, I describe the problem, and then I describe the solution, what you should do, you should just, in the first 3 months of 2018, you go and you fix these problems. Believe it, yes or no, you will see a change and you will begin to see the money. Because when you solve a problem and you succeed to solve the problem, you will see some change in your account. Because what's the difference between someone who is making money and the other one who is not? It's just because someone knows and has the skills and the other has not. It's not a matter of hope. You just trade the whole year, you buy, you sell, you buy, you sell, you buy, you sell, and then at the end of the day you're big even, you say, oh, all the people are the same like me. No, it is not. Not all the people are you. Some are losing money, some are break even, and some they are making money. So each trader is different. It's different because the level of knowledge and practice is different. Okay? Let's see Lighthouse Show. He says, for retail traders like us, how many stocks should we have in our portfolio to be able to manage them correctly? Now, Lighthouse Show, this has to do with your account size. So, and it has to do with your risk tolerance. So it's not easy. Each one should be different from the other one. Someone who has $10,000 is not the same as someone who has 50,000. So the positions will be different, and the risk should be different, and each trader is different. Even two people having the same account, 10,000, 10,000, but the risk tolerance is different. You, for example, you like risk, your friend doesn't like risk. So the position that you do or how many positions is different from one trader to another trader. But there are some guidelines. If you are interested, you can see training level 8, which is called How to Minimize Risk and Maximize Profits. Now this will give you an idea about position sizing, or you can see the other training. I have it here. Which is training 19, which is the same as the other one, but slightly different. The training level 19, which is called How to Manage Your Trading Account. It gives you a lot of information. It gives you a lot of information about position sizing and how you do this for yourself, because there are some criteria. Some traders are like risk, some people they don't like risk, so I can't give you a direct thing for each one. Okay, it's like you asked me, okay, send me a shirt, for example. I don't know your size. Okay, so each trader has a different risk tolerance, and each trader has a different account. Okay, so the accounts are different, so I can't give you how many positions to do, and I don't know you, I don't know how do you trade, I don't know how much money you have, I don't know nothing. I can't give you information like this. Okay, so you should try to study, for example, either training level 8 or training level 19, and you study it, and it will give you guidelines what to do. Okay. Now, as I told you, sometimes so wise men told me, what happened to your coffee? Now, I was invited to some friends and I drink too much coffee. That's why I eating pizza, a lot of coffee, a lot of nuts, a lot of stuff. So I can't drink any more coffee. Maybe later. And since now I am with you guys, I can't stop and go and make coffee. But I will drink it maybe later. Today I drank too much coffee. Maybe 3 cups of coffee. So I am full right now. Thank you very much, wise men. But I don't forget. Okay. The coffee is always in my blood, so I'm trying just to, when there is less, I will put more. It's like the other guy here who said, I am addicted to the market. So for me, I'm addicted to the coffee. I'm addicted to the coffee. But I was outside. I just come like 10:45 because I promised to do a live session. That's why I don't want to that you come and you miss the session. That's why I do it. Okay, thank you very much, wise men, for reminding me about my coffee. But I will make one after when we finish. I might go to watch a movie or something, so I need my coffee. No problem with that. Now, another problem with, understand that when I always speak about my training, is to acquire skills. And these skills are different. You think that some people think, for example, if they find good stocks, that's it. It's false. Because sometimes if you go and you check your trades, just an example, okay? Wiseman said, was just curious, no big deal. Yes, I know, no big deal. But as I told you, I go to some friends and I drink 2 cups of coffee with pizza and with nuts, with a lot of sweets. You know, it's a lot of things. That's why now my blood is all full of coffee, caffeine. Now, as I told you, the strategies, it means you should acquire many skills and each skill is different. Okay? The skills that you should acquire, they are different. It's not only one skill. For example, you say to me, for example, oh, if you buy a good stock, let's say someone tells me, just I know the good stocks and I will make money. Okay. You go in your life, it means in this year, for example, check, for example, this year trades. You buy a stock, let's say it is a winner, you make $100 or $200 and you exit. Go to that stock and check. Are you wrong when you exit, yes or no? Sometimes you find that you are wrong. You exit after making $100, $200, but the stock, you should have made $2,000, $3,000 in that trade, but you made only $200. It is your mistake. It's just because you don't know how to follow the stock, you miss that $2,000 or $3,000. So it is your mistake. It's not the market, because the market, there are some stocks that give you 50%, 100%, 200%, 300%. The stocks in the market, sometimes they are so generous. Okay? Especially penny stocks and smaller stocks. But it is up to you. Okay? Sometimes the market gives you money, but you refuse. Why you refuse? Because you don't have the skill to manage a stock. That's why, here is an example. Let's say, go and see your winners. Okay? Check these stocks. After you leave them, it means after you exit them with a stop loss or you take profit. Take these stocks. Have they go down after you get the stop loss triggered? Have they go down? Yes or no? You will find that some of these stocks are good stocks, but you exit early. It's your mistake. Okay? Now, since it is your mistake, it means that you left money on the table. Sometimes maybe you have made a lot of money this year, but the problem, you leave all the money on the table, and this is a big problem. But you can do that. You can go to your stocks and see them. But let's say if you exit the trade with a stop loss, let's say it is a profit, you have $100, $200. If the stock goes down, continue to go down, and you are right, yes, here you have done your job correctly, and you take some profits, and the stock goes down, and you are right, which is very good. But sometimes, I'm telling you, go to your account and check. Because if you don't check, you don't follow what are the winners, you don't follow what are your losers, you don't know what you are doing, that's why you break even or you lose money. Because it's all up to you. to change your situation from a loser or break-even trader to a profitable trader. This doesn't come by hope or by luck. It comes with hard work. Okay? Hard work, it doesn't mean that you should take 5 hours a day to study the market, as someone told me. Someone sent me an email before and he told me, I am studying this company for 2 months or 3 months. I said, what do you study in the month? For me, I just check the chart 5 seconds. I see how the stock is and what is the chart, and it will tell you if it is if I buy it or I don't buy it. That's it. I don't care about what you are talking about, financials, and what the company does, or how it is good against its competitors or other things. Okay? So people, they just waste their time. Okay? As someone told me that he uses a website, and this website asks for your statement, and they put winners and losers. I say this website will never help you. It gives you statistics, but it will never help you what's wrong. Because what's wrong, you need a strategy. You need skills to know what's wrong in your thing. For example, for me, if I have done some trades, I will check after I exit. Am I right? Yes or no? If I exit early and I left some money on the table, it is my mistake. So in the future, I should make more efforts not to exit early. And this, you should use techniques. It's not at random. For example, someone told me before, I see a guru, he tell us exit at 10%. I say, why you exit at 10% if the stock goes to 70%? Why? Does he will give you your money from 10% to 70%? It means 60% of your money that you should make, that he will give it to you? No. So why you stop yourself when the market is giving you money? Because you are scared. Now for me, if you trade and you are scared, let's say you have only $2,000, $3,000 and you save them for 5 years or 6 years, and you need this money, you will not be a good trader like this, because you are scared to trade. When you are scared, you do bad decisions because you can't think. In trading, you should think clearly without fear. That's why there are some big traders before, they speak about this psychological thing, which is to trade without fear. It means you should never be scared about the market. Okay? You buy, you sell. What did happen? What will happen? You are not going to die because of you buy a stock or you sell a stock. Okay? So don't be scared. Just do what is right and the money will come. These are some of the things that I speak always, and I try to always to clarify the ideas, to clarify the concepts that in general that are false. All the people, okay, sometimes you have concept that it is false and you think that you are right. Okay? So without practice, without looking at your problems and correcting them, you are not going to go anywhere else. Before, like 2 or 3 years ago, there is someone or 2 or 3, they are doing the penny stocks. And I tell them that you are doing, because these stocks are risky, and they are doing risky trades, and each year they break even. I say, if you change your strategies and you buy other kind of stocks, not just penny stocks, but other smaller stocks, and you try not to give too much to the market, you can make money each year. Okay? So this is up to the trader. either to change or to stay as you are. And this needs courage to trade, to change, to study the losers, to study the winners. Okay, and let's say, for example, you try to study the losers. When you exit the trade with a stop loss, does the stock go up? Yes or no? If the stock goes up, it means you are doing mistakes on the stop loss. Okay? Either your stop loss is too close. So, some people, for example, they do the day, for example, the stock goes $1. Okay? They put the stop loss at the end of the low of the day. They say this is the stop loss. This is not. You should check how the stock moves. If the stock is volatile, it means it moves fast. You should give this stock more room, because if you struggle and your stop loss is so tight to the purchase price, you will exit next day. And some people, they complain, why exit? I put stop loss, why exit? I say, because your stop loss is not good. You don't know how to put it. This needs work. It's not something that comes to you without work. You should work, you should see, you should focus on your trades, and if you do all what is right, you change your break even or losing money, and you become profitable trader. Okay, so thank you very much for watching. Please, if you feel, or if you have some things that might make you lose money, or you have questions, please ask, because I'm trying to continue speaking to the subject, but I need to see if you have some let's say some questions about the subject. So, as I told you before, break even is better than losing money, which is okay. Okay, understand that you are training, that you, even if it is 1 year or 2 years, don't be trading is a business. It's not a get rich scheme. It's not a formula that you make millions of dollars in 1 month or so. There is no magic in trading. Trading is just math, calculations. You should know what you are doing. You should calculate your risk. Okay, and then you do find good stocks, you follow them good, and you exit right, and then you can make a lot of money from the market. The market is so generous. Okay, the market is so generous. Sometimes it gives you a lot of money, but because you don't know how to trade, you leave all this money to other people. Okay, and I told you this is very simple. You say, oh, how can I know? I say, just go to your trades, take, for example, 10 winners and 10 losers. Put them where you bought, where is your stop loss, where you exit. Try to see the chart. Let's say this is stock, you have done this trade 2 months ago. Now check your stock. If the stock is still going up, that means that you are wrong, and what you did is wrong. This is very simple to assess. You don't need to other websites or other gurus or other things to check for you, or to pay other people to check what's wrong. What's wrong, you know it yourself. If you follow my methodology, it means you follow my ways to assess things. Because since my strategy is very simple to apply, it is easy to implement, but the solutions also, they are easy. If there is any mistake, you should focus on that mistake and solve it. Okay? There is one guy before, he has like $20,000. And he told me he has 22 positions. I say, man, 22 positions in 20,000, this is too much. Because the commissions that you are doing is very, very high. It will eat all your profits. This is for sure. And I'm sure you will never make money. Even if you make money, you make just little. Why? Because you are going to feed your broker only. 22 trades. It means positions. Let's say 22 positions by 2, it means transaction buy and sell. It's 44. Okay? Now, 44, you multiply by, let's say, 5 or 6 or $7. See how much you are giving to your broker. This is only in 1 week or 2 or 3 or 4 when you have these positions. Then you sell them all and you buy more, and you see how much commissions you are giving to your broker. Your broker should be a very big fat guy, because you feed him too much. I'm sure about that. Thank you, Hafiz Bouaishi. Hey brother, thank you very much for your help. Thank you, Hafiz Bouaishi. And thank you all the guys who come to this session. As I told you, if you are doing too many positions, too many, and your account is small, because you are not doing 12 position into a year or 6 months or 4 months. You are doing 12 position each few days, few weeks, because you buy a lot of stocks and then you sell them all, then you buy more. So it becomes overwhelming. You can't control the commissions, the fees, the other stuff. So try to make them fewer and fewer according to your size of your account. I don't know your size of your account, but you can figure out how much position you do, and it is up to you. But this is the rule. The more positions, the less risk and less profit. Less profit, because you are giving too much to your broker. And what you give to your broker is something that the broker will take from your account. Either you succeed in trading or you don't. It is taken from your account. Okay? So it's a big deal, this commissions. It's a big deal. So don't forget it. Try to calculate everything in your account. That's why I put training level 19, how to manage your account. It means you should look at everything in your account, because you are doing a business. This is not a job. Like someone asked me the question. When someone asked me the question, I understand if he understands something in trading, yes or no. He told me, I want $2,000 each month. What should I do? This is not a question that you should ask, because this is not a job. It depends on how much money you have. It depends on your level of experience. Have you made money before? Yes or no? It depends on many variables. So trading is not a job that each day you should make certain time of money, or each week or each month. Sometimes some months you'll be making more money, some months will be making less money, or you lose money. So this is a business. In business, it goes up, it goes down. It's not like a job. You work 1 hour, like an hourly rate, it gives you $10 or $15 or $20 or $100, whatever. This is not a job. This is the business. In business, you can make thousands of dollars in each week, and you can lose thousands also. So it's a business. It goes up, it goes down. So it's not a job that you fix an amount and you want this money. If you want to fix money, you should have a bigger account, and you should work on your skills to make that kind of money. But understand that the money that you are asking could be thousands of dollars more than what you need. It could be less, depending on your account, depending on your experience, depending on many things. Okay, so don't expect a lot of things from trading. You should expect a big fluctuation in your account. Now, Wiseman said, with a small account, even with low cost broker like $5 per trade commission, still eat your profits. Yes, yes, you know, small accounts, they have a real problem. I have explained this problem before, that if you have 2,000 or 1,000, 3,000 or 5,000, if you trade that much, it will eat a lot of money. So you should reduce your trades. You should do that. If you don't do that, you just do a kamikaze trading. It means you are not going nowhere. Hello, Theo Callias. He say, hi sir, thanks for your help. Price action is a reason that people do not take into account, so they lose money. Thanks. Now, Theo, what do you mean by price action? Because I don't understand what you mean. You say price action is a reason that people do not take into account, so they lose money. You mean like day fluctuations or fluctuation of the price or volatility of the stocks? What do you mean by price action? Because I don't get it. There are a lot of things in price action. So, as I told you before, a lot of things can make you break even. Not just a training or experience, or there are a lot of things. Some have a relation with your psychology. It means you don't like to risk. So when you don't like to risk, your profits will be less. Okay? Let's say when you go to penny stocks, you are going to a risky stocks, so you should like risk to go to smaller stocks. If you do penny stocks and you don't like risk, you will have a problem, because you will be tighter. You will put tighter stop loss and you exit each time, and you will exit early when you see some money. So this will never help you try to do anything. Okay, so yes, smaller accounts have always a problem, and in training level 8 I have explained this clearly, and I gave examples how to see that, because with examples it will give you a clear idea about what I am talking about. Okay? Yes, thank you very much, Leo. The price fluctuation and the volatility, you should take it into account, and it may lose money. Yes. Okay? Yes, it's true. Especially if you put tighter stop loss. If there is like fluctuation, price fluctuation daily, or a lot of volatility, you will exit the trade easily. That's why some people, they told me always when we buy, we get kicked out from the stock. It's just because you don't know how to put stop loss, or you have been into a very volatile stocks that swings too much in a day. Okay, some stocks are like that. So your experience, when you practice a lot, you should either avoid this kind of stocks or give more volatility, or give more room to your stop loss not to be hit each time. And you can make a lot of money from these stocks if you know how to handle them. And if there is like a pump and dump scheme in a stock, understand that you are in a very, very volatile stock. You can make a lot of money, but also you can lose a lot of money if you don't manage your trade. Okay, so thank you very much for watching for this session, and I'm trying to continue. Please, if you have any question about why traders break even or lose money, and or you have another idea or another reason that I didn't mention, you can write it on the chat room, and I can give you some insights about that. And there are some subjects like this which looks boring, okay, because some people they like excitement, okay, they don't like to see their problems. If you have a problem, you should fix it. There is no other way. Now, going away from a problem doesn't mean that you give a solution to it. That's why in my training, why I do this training level 19, which is how to manage your account, training level 17, how to fix your trading problems. It's just because I see a lot of traders, they do a lot of mistakes and they don't want to correct them because they don't want to look at their account. Oh, you say, okay, this year I lost 20% of my account. My account was 10,000, now it is 8,000. I don't want to see anything. I might give up and just close my account and take my money. Okay? Now do you think that this kind of guys will succeed? No, because whatever you do in your life, in a job or in a business, if you give up, it means that you can't continue into this business and you will do for everything you do. That's why if you are a loser, small loser, you become a big loser by time because you give up everything you do. Theo has said how people can work on their trading psychology. Now see, Theo, there are problems. You should know what is the problem in order to find a solution. I have spoken about some psychological problems. Okay? Number one, thank you Moises Mirwa. He said, thank you sir, I really got a lot of good advice. Thank you very much. I am not giving you advice here, I'm just giving you my opinion, and I shared with you my experience because I have traded a lot, so I have some experience. Since I teach my training strategies, I know what is the problems that some people, traders, might see or face. Since I have faced them myself before, so I give you solutions. But the problem is not, you shouldn't have all the problems that I speak about. I speak about 28 problems. You might have 2 problems or 1 problem or 6 problems or 10 problems, or maybe you have all the problems. But you should have some of these problems that I'm speaking about if you break even or you don't make money. Okay, so thank you very much. Now let's speak about Theo Kalias. He said, what is this, how do we work on our psychology? For example, you buy a stock today at $20. Tomorrow is 21. You buy 100 shares and you see $100 in your account. It's profit. Now you get excited, but you get scared. You say to yourself, maybe I stay another day, the stock will go down and I lose this $100. So what should I do? I will take this $100 and exit the trade. Now this is false. This is psychological because you get scared of the market. Okay? So how to solve this problem? You should follow the trend, the big picture. You shouldn't follow the daily fluctuation. You should follow the whole thing. Is the stock is going up as a trend? Yes or no? If it is yes, you should hold the stock. And there are techniques that shows you when the trend stops. Second example, let's say you buy a stock at $20. You didn't put stop loss. You don't want to. Next day it goes to $19. It means you lose $100 if you have bought 100 shares. But you have hope that the stock will go up from 19 to 20 and you get back your money and then it goes up. So what's this? This is a psychological problem. You are trading on hope and luck. And you think that you are right and the market is wrong. Because if the market is going down, it means the market is right, you are wrong. But you try to be stubborn, you have psychological problem. And you wait and you wait and you wait. Let's say from $20 it goes to 19, 18, 15. And then when you get the pain, you sell. And then you blame others. You blame the stock market. You blame Wall Street guys. You blame your worker. You blame market makers. You blame anyone. But you don't blame yourself. Although it is your mistake. So these are kinds of psychological problems that we should fix before you do a good trading. Okay. Jason Yates has said, beginners don't have patience, and as soon as they see little profit, they get excited and want to take that profit and call it a big winner. Yes, that's why there is someone who just began to trade, and he sent me that he has more than 50% of winners and less losers, and he thinks that he makes money. I say, did you make money? It means, are you profitable? He say, no. I say, because you think that those are winners, but they are not. Because what is a winner? Because in websites or whatever criteria you have, a winner, it means it is just positive. Even with $1, you make a profit with $1. The software or the filter that you use, it says it is a winner because you make money. Although you make only $1 or $10 or $100. But for us, it is not a winner. It is just break even. You make 100 or lose 100. This is just break even. You are not losing too much money and you are not making too much money. So it depends how you look at the assessment. Trading assessment is different. Thank you very much, Jason, for the statement. Now, big profits come when controlling emotions and have a plan when and where to exit a trade. Yes, this is what we do, and there are techniques. It means it is not something at random you do. There are techniques that shows you what to do, and this is what I teach. For example, in training level 7, I teach those techniques, how to follow an uptrend, how to follow the stock. There are techniques that are very simple to use and you can use them. JJ says, stop loss is one of the best. At least you know how you are willing to lose. Yes, stop loss is to calculate your risk in your trade. Okay? You should do that in each trade. Because here we are not doing investing. We are doing just swing trading. It means short-term trading. And it's just, we see winners. We follow trends. And that's what we do. Okay? We are not doing investing for many years. So that's why swing trading is just you attempt to follow a trend. If the stock trends up and you make a lot of money, that's our goal, is to make money from trends, not from 1 day or 2 fluctuations. Now, except when there is, for example, a gap up. Okay? Let's say one time, I'm telling you the truth, I have done this trade and I posted on YouTube before, like 1 year or 2. I bought a stock, it's called ANAC, A-N-A-C. The stock was 78 it goes to $135. It means I double my money in one day. It means at the end of the day, tomorrow at the end of the day, I sold. Why? It's because I doubled my money. So sometimes you don't have to follow the trend if you have a gap up and you have a lot of money. But from 135, it goes down after down and down and down. So if I don't exit, I will be losing a lot of my profits. Sometimes the market gives you a gift. Accept the gift and smile and take the money. Okay? You put, for example, $78 a share. You buy whatever hundreds. Next day you make thousands of dollars. You exit the trade and you have this $1,000. This is how we trade. It means whenever you see good money. But if the stock is 78, tomorrow is 79, believe me, I'm not going to sell my stock because I don't see that much money. Okay? So you should just always see how much money you make. There is no limit to how much you make. Don't limit yourself. As I told you before, there is one guy who said to me, I always sell at 10%. I say, who tells you this? I say, a guru online. Now this guru is not right. Okay? Because the stocks doesn't go only to 10%. It can go to 100%. Why should I leave this money to the market? And then you are complaining, I don't make money. Yes, you don't make money because you don't follow the trend. This is logical. It doesn't need a big brainer. Okay? If you just see the chart, you will recognize that you did a mistake. So you should correct your mistakes and then you can make money. JJ say, some of my friends are only trading on earning dates. Do you think this is a good idea? Now, earning dates, it means they are following stocks that responds to earning dates, because not all the stocks they gap up or gap down. Okay, this is a very risky trades. Okay, you might have a gap up, you might have a gap down, so the risk is too much. But if you like the risk, you do it and you have strategy, it's okay. But for me, I don't do strategy about gap ups. But here what I do, I buy the stock because of my criteria, not because of the earning date. And most of the time, if the stock is going up according to my criteria and there is an earning date, I always stay. Now you tell me why? Because I like risk. Most of the time I have winners. I have gap ups, not gap downs. Now why? Because the stock is still going up. Okay? And most of the time, some people, they know better than us, mutual funds, so they have some knowledge about the company, or they have some knowledge, so we should follow and take the risk. I have never exit a trade before a market maker, before an earning date, because I am scared. I have never been scared in my life, because either you take the risk or you don't trade. Okay? So you should choose what you want to do. But risking your money sometimes bring you a lot of money. Okay? So Wiseman said, JJ, sure hope your friends understand the high risk trading on earning dates. Yes. But I have seen, believe me, I have seen stocks that are $18. The next day is $5. Okay? So there is a big risk, especially with stocks that respond to earning dates, because not all the stocks will respond. Try to check, for example, in some stocks, you have the earning date, it happened nothing, which the day the stock is trading normally, it doesn't go up that much, there is no gap up or gap down. But There are some stocks like Facebook, Twitter, Google, Amazon. There are some stocks who are famous to have gap up and gap down. Why? Because there are a lot of traders, they are there each day trading. So whenever they hear something good, they just buy blindly. Because if there is a gap up, they will make a lot of money. That's it. It means it is just a way to do trades, to do risky trades. Theo Kalia say, what do you think about RSI and EMA on first? No, I don't use them. Now the EMA, okay, which is moving average. If you change the moving average day, like 50 days or 20 days or 150 days or 120 days, you see that the chart changes, the lines changes. So they are not accurate. They just calculate the past closes of the days. So they don't give the future. They are lagging indicator. RSI also, you say it is oversold. It is oversold. Do you think this is old information when they say it? But the next day things change, so they don't give you. These are just small strategies. They are not complete strategies. They are small strategies. If you put them in your strategy, you will have a mixture of strategies, and then you will never make money because you mix everything. Okay? Who tells you that there is overbought, oversold? There is no what we call oversold. I have seen stocks that they go, they say overbought. It means the trend has finished, but the trend continues for 6 months or 1 year. So these indicators, they give you past information. That's why they are called lagging indicators. I don't use them. If I want to see the past information, I see the chart. I don't need them. That's why I don't use them in my strategies. I use only the resistance line, support line, the trend line, something that I made according to my own criteria. Okay, my own criteria and my own signal. When I want to enter, when I want to exit. I don't follow these indicators at all. That's why, yes, as Jason said, all indicators are laggers. You do not need them, you only need the price. Yes, most of the time we need only the price. Okay, we don't need, because those indicators are small strategies, and people and traders each year, there is another indicator that comes to the market into a book. A trader makes an indicator and he gives a name, and it is based on price. It means based on the closing price, and then he published the book. So when Wall Street published this book, a lot of millions of people, they buy this book because they think this gives them the way to make money, but it's not true. That's why we have more than 300 indicators. If one indicator is working, why we have 300? Okay? Because why these indicators do not work? Because trading is human. Who moves the market is the psychology of the traders. It's not machines that change. That's why the machines and softwares cannot trade for you. They always fail. Even you use algorithm and math, you can't succeed. Why? Because it's us there are foolish people in the market. The stock is going down and it is shorted, and the people, they buy. Okay, so that's why the market is illogical, because the people who are inside, most of them, they don't understand what they are doing. Okay, they just buy and sell, buy and sell. At the end of the year, they lose money. That's it. Then the next year, they do the same. They buy and sell, buy and sell, buy and sell. That's it. And then they lose all their money, and they give up and buy stock market, and they go to Facebook blaming Wall Street, and they speak about scams, become Illuminati. They speak about this. They go to rent in some websites or forums. That's it for them. But people who want to succeed, you should never give up. It means understand why you are not making money. There is something wrong in what you do. So if you follow and search for these things, you will be, when you correct your mistakes and acquiring skills, you will be making money in the future. So Jason Elias 8 says, I know a person who told that he sold a stock, and when I asked him why, he said that the MACD crossed something else, and I said that he should not have sold. And the price of that stock at the time was 44, and now it is 50. Yes, it happens. Most of the people who don't know how to trade, they don't know why. If you are using indicators and you are losing money, it's high time to stop using that indicator. Because why the charts are full of indicators? Because it's just whatever comes goes there. And for me, when you see my charts on YouTube, you find my charts are empty. There is nothing. Even the volume, I don't use it. I just check the bid and ask, but I don't use the volume in my trading. It means the volume goes up or goes down. For me, it doesn't mean nothing, because I'm following the price. Sometimes the volume is low, but the price is going very good. So the volume has nothing to do with me and with what I do. Okay, so it is 2 hours right now. Thank you very much for watching. Please, if you have questions, send me a question. Here is my website and my email. If you have questions, please ask. Okay? Or if you forgot to ask me questions, thank you very much. For those who are into my subscriptions, as always, we do searches. You ask me about my strategy or any training, I will give you answers by videos, and that's it. JJ said, I bought OTC stock and was making a lot of money. I tried to exit when the market order, it rejected my order. Why? I have no idea. You should see JJ, you can send me your trade with this OTC stock, because OTC, if you don't if it was rejected, it should be rejected by your broker. So you should call your broker and say why on the spot. You shouldn't wait. When there is a problem in your account, you should take the phone and call them right away. Don't wait until tomorrow, because sometimes something happen and things will change, and you will never know. So JJ, you should always ask your broker. This is the one who, because when it say rejected, it means it's from the software of the broker itself. It should be giving you, it gives you a reason. If it doesn't give you a reason, you chat with them or you call them. You say, my broker told I can only exit with limit order. Are you after the market hours or before the market hours? Yes. If it is after the market hours or before the market hours, yes. We use only limit order. There is no a stop order. So try to see yourself. Is it after the market close or before market close? Or is it during the trading day? This is the difference. So JJ, what is it? Is it in the middle of the day? Before the market close? So I don't know. I don't know about this. You should ask your broker why, because it is not normal. Okay? in the trading day from 9:30 a.m. to 4 p.m. stop orders are accepted, are always accepted. Now there is another thing. I'm telling you maybe something. If it is an IPO, sometimes the first days they don't allow stop order. Is it an IPO? JJ, try to send me the stock, and we can discuss it later. You send me just the stock, I will check it and I will see it for you, okay? But in general, most of the time when this happens, you should not be, don't hesitate. Just call your broker. Theo Kalia say, how can I reduce the loss if a gap up or gap down happen and so my stop loss do not work? No, the stop loss always work. It is, I know you will get the market price, whatever it is. But when it is gap up, you should get out. And if it is gap down, you get out also, but with the price that it is in the market. So, Theo, if you have a case or you have a stock, you should send me information about that stock and you tell me what did happen in real, in order to help you, because I don't know. You say they reduce the loss if it gap up. Are you shorting the stock? Because you say gap up. So you should send me, Theo, you should send me an email. Okay, send me an email. This is my website, my email, and give me the information about the stock and we can discuss this after. Thank you very much, JJ, and thank you very much, Theo. Yes, you know, you say you are lucky trading starts at 9:30 where you are. 7:30 starts here is killing my sleep. Yeah, yes, it depends when you are, where you are in the market. I don't know where you are, but it's okay. Thank you very much and have a good night. Thank you very much for all you guys for being here and asking questions and answering. Please, thank you very much. Thank you, Wise Man. Thank you, Mr. Riyar. Oh, you are in Denver, Colorado? Ah, yes. Okay. Thank you very much, JJ. Thank you very much, all of you guys, for being here, for asking the questions. But understand that if you have question, you don't need until we are in this session. You can just send me an email, and we can discuss this by email. And when we get here, we can speak more. Okay? So. Oh, you are. If you are in California, yes, 6:30. You have 3 hours. Yes. If you are on the West Coast, yes. You know, sometimes it is good, sometimes it is bad, but there is no problem. Here it is 9:30 for the market, so in the East Coast, but it's okay. So because for us, I'm not doing day trading, so I don't do 9:30. Okay, I don't do 9:30 because I don't trade in the morning. Yes, your training says to do the last hour of the market. Yes, the last hour. It means 4 o'clock in the east. So for California, it should be 1 o'clock p.m. because we have 3 hours between us and between California. Yes, the last hour. It means if you are going to buy stocks and you are in California, you can buy them from 12 to 1 o'clock because 1 o'clock is the close for you guys. For here, it is 4 o'clock. So from 12 to 1 you can buy and you can do the thing. See, Theo, you will get two. You will get two. You will get two because the stop loss doesn't work after the market close or before the market close. It works only, so I would write it for you, man. Maybe, so stop. Just I will write it for you. Stop loss works between 9:30 a.m. to 4 p.m. only. So make sure you understand this. Stop loss doesn't protect you after the market close or before the market close. It doesn't help you. Now, if you have a gap down, it will give you the first price in the market, $2 or $1.55 or whatever is the price. But if it is a gap up and you make money also, but at that time you don't put stop loss. The stop on code becomes a market order when the stock market is hit. Yes. So the stop order becomes market order. And market order, what does it mean? You ask the exchange that you want to exit on any price available. So it can give you any price. Thank you, Theo. Okay, thank you, Theo. Thank you, Mr. Honda, and everybody who was here. Thank you very much. And please, as I told you, try to send me an email if you did not, or if you have more questions. And good night, everybody, and see you next week. Thank you.